Yeah, I'm just waiting for the moratorium picture as well, but I think we'll have to wait for the press conference on that one. But Kajal Gandhi, what's your first take? Because like Varun just highlighted, it seems like a bit of a mixed bag on the weaker side. While the NI has come in above the consensus estimates, the PAT has come in below.
I think provisions have been kept higher, and which is in line with thinking that most of them are providing for the COVID. And as such, Mr. Kotak has been cautious for quite some time. So I think that is the reflection of that. And other income has dipped a lot. And that is also one of the reasons why overall bottom line has got a knock. But largely it seems in this environment a reasonable set of numbers.
Sure. Hello. Krishnan, let's get your view in as well. Is the market being a little unnecessarily grim on those numbers? Provisions at 962 versus 1,040 or so, and net interest income at about 3,700 versus 3,600.
Yeah, thanks for having me on the show. So, I think in this environment, honestly, we are not necessarily looking at this as a bottom line. You're basically looking at resilient balance sheets, and the more you can strengthen it during these times, like providing for what is likely to come in the next 8, 12, 18 months, that only augurs well. Plus, you raise fresh capital. So I think there are these 4 or 5 banks in the private sector space which have been doing all these right things in terms of at least preparing or just bracing themselves for what's likely to come post-COVID, post-moratorium. I wouldn't necessarily take it as a disappointment if the PAT is lower for one quarter here and there. I would look at more directionally if the balance sheet outcomes are stronger than PML actually.
Okay, fair enough. So not too disappointed in those numbers at all. Kajal, on the NPA front as well, 2.7 versus about 2.25.
So that was, we were building some expectations on the asset quality to surge. In this quarter, not most have given a rise in NPA. That may be considered as a slight marginal disappointment. I think more is yet to come, and that is what everybody will be looking for. And not this particular quarter's small addition, maybe that may not be one of the reasons. I think the commentary which one has to see what they're giving on the future looking NPAs.
Yeah, absolutely. Krishnan, after these numbers, I know lots is still to be heard from Mr. Kotak himself, and we should be cutting to the press conference just a short while from now. But would you say that you would change or revise your rating, or for that matter the price target on the stock, given how sharp the rally has been in the entire banking space, not just Kotak Bank?
For a very long time, we have actually had a sell rating in the company, so we have been looking for opportunities to kind of be more constructive on the stock, and we have turned constructive on the stock. Because in this environment, as I said, we've generally been disappointed on low ROE, on low growth. But in this environment, that doesn't matter. In this environment, what matters is, can you survive the crisis that's likely to be faced in the next 12, 18 months? Because it will come. I think bad news will come. India has never seen a zero GDP, let alone a negative GDP, right? So I think there is a lot of shock that will need to be absorbed, and Kotak Mahindra Bank will be one bank which has those shock absorbers in place. And there are these 2 or 3 banks which have accelerated impairment recognition in the June quarter itself. So I think anything that you do to strengthen the balance sheet in this environment has to be looked at in a positive sense this morning.
Absolutely, and if in the post-COVID world you were to really analyze banks, that would be largely on 3 parameters on a longer term basis, not quarter on quarter. A being the provision buffers, capital build-up and superior liability profile. We all know that the capital build-up in that sense has been comfortable when it comes to Kotak. But on the other two parameters, does Kotak Bank numbers right now, Krishnan, do they tick all the check boxes?
So on reserve, is that everything? So we are looking at basically three large metrics out here, three broad parameters. We are looking at whether you have the shock absorbing capital to be able to shore up the balance sheet. Number two, are these banks proactively and prudently building reserves ahead of impairment recognition? And thirdly, do they have a strong core operating profitability? Because if you don't have operating profitability and then you have to provide, then that weakens your balance sheet further. So if you have a strong franchise, if you have a strong profitable franchise, and then you are able to build reserves ahead of the disaster, I think that's what we are looking for, and I think Kotak Mahindra Bank probably ticks most of those boxes.
Thank you both of you for joining us on those earnings, and we've got lots of earnings trickling in this afternoon to get to a few more of those. But first, let me also go across to Nikunj for the editor's take on those numbers. Nikunj?
Baba, look, all the banks have exhibited, at least the good banks have exhibited, that they have taken enough and more provisioning measures in order to strengthen the balance sheet. And with Kotak, we know what policy they have adopted. Uday Kotak has gone on all the forums and he has said that, look, I want to keep my ship steady. What is a steady ship? The definition of a steady ship is a solid balance sheet. What is the balance sheet of a bank? Asset minus liabilities. So in this case, when you increase your provisioning buffer and if you raise capital, what you're essentially doing is you are making sure that when the moratorium window is going to get lifted, even the moratorium numbers have come down for a lot of banks. They are taking adequate, I would say more than adequate measures to ensure that they do not face the heat of a rising NPS cycle, or if moratoriums do not really get get addressed the way all of us are expecting. So with some of these fine banks, I think they've done what could be called as an excellent job of raising capital and strengthening the balance sheet. Now is the tricky part, which is that which bank will move in which direction. We know that ICICI Bank has really migrated its balance sheet to become a retail balance sheet. HDFC Bank has started investing in infrastructure lending. Kotak is still maintaining that, look, we will not grow, we will compromise on the growth, but we want to remain solvent because these are challenging times. So depending on the risk profile you have, I guess the three banks are giving you different entry points and a different spin on the economy. ICICI Bank, cheap, migrating towards retail assets, subsidiaries doing very well. Kotak Mahindra Bank will grow at a run rate which would be lower than the industry average, but it will command a premium because of its book value. HDFC Bank, excellent book management. They've done a fantastic job of keeping moratorium under control, and then they also don't need a lot of capital, but the challenge there is Aditya Puri is going to retire before the year end. So depending on what your risk is, you have to really choose. This is not like a universal time where you can say, okay, I'm buying banks. No, you have to buy a bank depending on what kind of appetite you have and what kind of time frame you have. And that is an individual question. I mean, that is something which you and me cannot answer. That is something which investors, traders and our viewers will have to decide for themselves.
All right, Kunal, let's get a check from you as well on Kotak Mahindra this afternoon.
I think, start of the day, this was one of the strongest stocks so far from the banking pack. I think it was holding on to those 1340, 1350 levels very, very comfortably. And looking at the Bank Nifty, which is down 500 or 600 points, and Kotak Bank remaining still positive, so you can probably attribute that this was one of the strongest bank. So I think the stock reaction seems to be more in terms of in line with how the markets have reacted to the overall bank nifty and maybe to the other set of private sector banks like an ICICI bank or like an HDFC bank, etc. So I think in that regards maybe the reaction could be a bit short term oriented, but the strength which Kotak Bank has shown in the last 2-3 days, I think that's some sort of an indication for the stock price to come along. Then looking at the bank nifty which probably now enters into the oversold territory, you then look out for more of the stronger set of banks, and Kotak Bank falls in that kind of line. So I strongly believe that Kotak Bank could probably bounce back from current levels, maybe over the next couple of days. 1395 to 1400 is a bigger breakout point for Kotak Bank, and that breakout point could probably lead to another 50 to 80 rupees on the upside as a potential target. So I'll watch out for Kotak Bank over the next couple of days, and especially that 1400 benchmark level or the breakout level. If the stock provides that breakout over the next couple of days, then I believe it could be a good buy at those kind of levels.
Q4 itself, the COVID provisioning stood at 690 crore rupees for Kotak Bank, and I think there are some more numbers which are coming in. COVID provisioning stands at 616 crore rupees. Slippages at 796 crore rupees. So largely you would have to say, well, it's a bit of a mixed bag. The numbers are a bit on the lower end of the ET Now estimates. And you can see the stock price as well, pretty much around the lows of the day, 1.25% lower for Kotak Bank as we speak, 1335 on the stock price. We're going to take a very quick break, still awaiting the press conference from Kotak Bank.